to some panel discussion with some questions and answers, and I'll go through the panel. But I think I'm going to skip Bobby to start with and come back to him on the second question, because I'd like to go to Dipak first. Because obviously the platform that you showed is very interesting, but I just want to try and understand, because it looks like it's a platform for banks. How can the platform be used by ship owners to get access to financing?
Okay, the platform is 70% banks, as I mentioned, and lots of other insurance and funders. So if you're a borrower, a ship owner, then really it goes back to your banks, because ultimately the bank may want to, you may have a certain limit, okay? Therefore the bank needs to reduce its exposure. Say you've got 50 million already, they want another 50, well, they need to get rid of it. Now for us, all we're trying to do is make it easy for the bank to sell down that exposure, okay? Now, to do it in an efficient way. There's a global market who want to have shipping assets. If they're going to the same old 15, 20 other banks, but we know there's a huge amount of demand from Asia, so those banks can sell down. That helps those owners. But at the same time, we also want to make sure that you are talking to your banks to say, okay, are you on the platform? How are you using my loan? We had a conversation this morning about how do banks sell down their exposure? Because ultimately, they need to, because of Basel IV, generally, they need to reduce their exposures to shipping. And that's why the loan-to-values are so low, right? They cannot go above a certain threshold, otherwise the amount of capital they have to put down makes it penal from a margin perspective. The other point is look to your advisors. The debt arrangers are able to go on the platform. No borrowers are allowed on the platform. Why? Because the whole point is that people or arrangers and banks understand the market more so than an owner who wants maybe 90% finance at 1% margin, right? So they're structuring in a way which makes sense for them. And so everybody on the platform has been vetted. They understand what they are doing within their sector, whether it's aviation, shipping, infrastructure, from that perspective. So I can highlight that the efficiencies, and I can highlight that the access for other banks to partner up as well. So you've got your favorite banks. How else are they working together? There's other funders who may be able to help a margin lower than your traditional 4 or 5, right? Because it's a club, right? That's the thing, right? So therefore, what you're trying to do is widen the network within your existing banks to work together, maybe.
Okay, so it's a useful tool for existing borrowers and existing ship owners that already have a reasonable chunk of debt. But for a new owner who wants to raise debt for the first time, then the platform is not really viable.
No, that's not true. So if you've got a new company, new startup, ultimately you would have to go to an arranger to do that. They would put the deal that they want, whatever it is, single ship, 2 ships, put it on the platform. There are certain banks that will not touch a startup, but there are plenty of other funders that will. And that's the point, is the efficiency of putting it out there. We have over 60-odd funders. And in that chart I showed, a whole range, okay? High LTV, low LTV, but there's a price to pay. And that's the value of the platform. It's efficient to get that information out, or efficient for that deal to be placed globally.
Okay, great. Yep, no, thanks very much. So, Bobby, I now come to you. I wanted to start with Dipak. I mean, obviously, Abu Dhabi Ports probably doesn't have a shortfall of banks coming forward to provide opportunities to you. So, would you see a platform like this of, I've got 2 questions really. One is, would you see a platform of something like this of use to AD Ports? And then my other question is sort of linked. You had your 5 key risks of capital, risk, compliance, strategy, geopolitics. And which of those is the greatest challenge? Does the finance side come into that linked, or where do you see yourselves as AD Ports?
So on the platform, definitely it's something that we would look at. Right now we have more traditional financing options, more of RCFs, bonds and things like that. Platforms, something we should look at as we grow our fleet. You know, we were just speaking today, I think Captain Amar spoke about us expanding to around 250 vessels. A few years back, it was like maybe less than 10 or so, or 15 or 20, so it has gone up. So, of course, there will be always opportunities, and we will look at that platform. It's something that we should be. In terms of, the second question, what was our second question?
On your 5 pillars, you've got capital, risk, compliance, strategy. So which of those is the biggest risk for you at the moment, and how do you see to address that?
I think the biggest risk of all the five is the strategy part, right? Because all the other things, you can actually go. We are actually a company which is, we started in 2006. In fact, we really started picking up only maybe around 2021. And going forward, we have, in the last 2 years is when we started making some big acquisitions, right? Now, the strategy is extremely important because you can actually buy big companies, but it's very important to ensure that you have the right fit. Because if you make wrong decisions there, it can actually derail your growth. The other things are something that you can kind of, work around. But once you kind of get into something where, you make a mistake on the strategic fit, then that is a challenge. So I would say the strategy is one of the most biggest challenges.
Great, thank you very much. So Ian, you talked about the CII, and I mentioned this morning in my speech. So you talked about the EUAs, which became compulsory from 1st of January this year. For those that don't know, Ian didn't put the pricing in, but basically they've been trading. They were voluntary for shipping up until 1st of January this year. They have been compulsory within the EU for other industries, and some shipping companies could voluntarily have purchased them prior to the 1st of January. For the last year or so, they've been trading in the range of 70 to 100 US dollars per ton of carbon. There's approximately 3 tons of carbon per ton of bunker fuel burnt, which means that this is a cost adding, when it gets to full implementation, of between $200 and $300 per ton to your bunker bill. So my question to you, Ian, is with this huge cost that's coming to the ship owner that is either going into the EU, out of the EU, or intra-EU, how are you interacting with the banks, and what are you actually providing for them? Are you providing the actual burning of carbon? Are you reporting it to government as well for the collection of money? Or how is Class playing a role, or your advisory playing a role in all of this?
So Class takes a role as a verifier of the data, right? So Class societies have systems that collect the data on a continuous basis in some cases, on an annual basis on others. Our system, as I mentioned before, is continuous. And this data needs to be verified every year and submitted to the EU. So that is the role of Class. And so when it comes to the EU ETS and calculating what is due from the owner to the EU, then this is the data. This verified data forms the basis of that. And then, as you saw, our tool enables an owner to produce verified statements on a voyage basis, if they need a voyage basis, which they can use within their stakeholders, for example, towards charterers, who would be eventually footing the bill, one would hope, if an owner has been organised and got their agreement in place.
Yeah, so as a follow-on, because my information is a little bit dated now, but in my previous company, I took delivery of 6 new buildings throughout second half of 2020, and we had Poseidon Principal lenders. And we, at the end of 2021, the first full year, we actually, within 15th of January 2022, submitted all of the data. And the sort of question came back, what's this? I said, well, it's in the loan document. This is a reporting requirement that you put on us. You wanted to have the data. Here it is. We've been collecting it. So I'm thinking that we're now 2 years further forward and the EUA's come in. So are you seeing a different reaction from the banks? Are they actually taking the data and doing something with it, or is it just tick a box and put it in the filing cabinet?
I really don't know. I mean, I don't deal directly with the banks myself. Are they doing anything? I'm not sure. But for sure, it's becoming a very important topic for the owners and for the lenders. So, judging by the way that our work has grown towards the banks, and judging by the development of all these initiatives like the Poseidon Principles, but exactly how they're then responding to that, I don't know. Perhaps some of the other panelists could give some advice on that.
Maybe we'll open to the floor when we get there. Thank you very much. So, Board, I've got 2 questions for you. One is an easy one. If you answer that well, you don't get the hard one. So the first question is, The insurance industry back in 2009-10, they were the instigator of armed guards coming onto vessels with the Somali piracy situation. Basically, the oil majors were not allowing weapons onto ships, and the insurance industry basically initially gave you a discount if you had unarmed guards, never saw the point of that, armed guards, and eventually you couldn't get insured. And the fact that you couldn't get insured unless you put armed guards on your ships meant the insurance industry forced the oil majors to accept armed guards on their ships. So with this in mind, how can the insurance industry force the green issue in something similar to that scenario?
I think the first point there is it's already happening within the insurance industry, in that insurance industry will have to demonstrate to their shareholders, individual companies, that they're involved in green initiatives. And you see an influx of requirements and requests when they look at a ship owner. 3 years ago, they wouldn't even ask for your ECG numbers at the end of the year. Now they're actually taking an active position into that. I think right now it's for collection of data, it's not for penalization, but I think over time they will be governed by their shareholders, and the industry itself will govern itself into putting stricter regulations around it. And if you want an A-rated security with a good track record, then you would have to comply with this, which is actually effectively pushing out some clients out of the traditional insurance markets in Europe and Americas. But again, there are other places to insure, and China being one of them, for example, which might not have stringent things. But I definitely think insurance market is on the forefront of this, and they're looking for companies that are actually making a stride and an effort to comply with the regulations and ideally supersede it.
I think that's a very good answer, but it's not good enough to avoid the hard question. In your presentation, you said that Gallagher, and bearing in mind you're just one broker, you're placing 1 billion annually to the insurance underwriters. And in your presentation, you said that in the last 5 years, you had successfully negotiated 750 million of claims. That means the insurance industry has 4.25 billion of excess. So do we think the insurance industry, if your numbers are correct, then with that 4.25 billion of excess in the last 5 years, could the insurance industry be assisting the ship owner in investing into the green initiatives?
Or is it all broker commission? No. The fact of the matter is that the insurance market has gone through cycles. I think it's only until about 2 years ago on the marine hull side that they started making money. It's been overcapacity, and we have seen continental Europe underwriters writing for a deficit for a continuous of 14 years on the average book, still providing capacity and still people coming in. The beauty with marine insurance in specific is that you get money in first, and then it takes a year to pay out the claim. So that money is being invested again. It is also talk about capacity. So if you're insuring a real estate property, that property is there, and it cannot move if there's a hurricane, if there's an earthquake. That property is located in one place. Shipping, like aviation, moves around. So you don't have accumulation of a single event to the same effect. So when you are putting capacity aside to write, say, windstorm aggregation in the States, you're putting up, say, $1 billion to be able to write $3 billion of exposure. That $3 billion of exposure tree can be used again to do aviation, and again to do marine. So and to some extent, energy as well. So it's just use of capital. So very often you'll find that even though the marine insurance industry is not, in general terms, making a huge profit, it is beneficial for the insurance companies because they're utilizing the same capital several times. there are players in the market who have been there for the whole of this downturn market. We're seeing currently the insurance market premiums are showing signs of softness. We've gone through a cycle now of 3 to 5 years where the prices have gone up, and now we're seeing it sort of falling off, and it's about to go dipping down again. So it's a good time for hopefully for ship owners in the future, but we also see a reason for that, and that's the shipping industry itself are making corrections to the way they operate. They're becoming more efficient and more safe, and safety is a massive focus for most of the ship owners that we deal with.
Great, thank you very much. Nitin, you talk about Lila having low leverage, 32%, which is pretty low. Obviously, you're born out of ship recycling, which in itself is green as opposed to ship scrapping. And you also mentioned that your lenders are Japanese, Chinese, whatever. Do you have any of the Poseidon Principle lenders within your portfolio?
I thought difficult questions were only meant for him. You'll be surprised. The answer is no. But there is one particular bank that we are discussing with. Interesting you asked me this question, because when I went to them for the first time as well, I won't name the bank, of course, but when I went to them, I also thought there'll be no interest. But when I went there, what they are looking for, actually, is a roadmap. What they are saying...
Well, my questions come because you are a member of the Hong Kong Convention, you are a member of the correct scrapping policies, and you are doing all of that. So my question is it that the Poseidon Principal banks don't want you, or they should? Because in my opinion, they should, because you're someone that is extending the life in everything that you said. So it's something that they should be doing, even though the average age of the fleet, I think you said 15.6 years. It's something, in my opinion, that should be happening with the extension of life and the measures that you're putting in place.
Absolutely, and that the bank that I'm speaking about, now I'm open to talking to more banks. Honestly, we were ourselves not talking to them, but now that we have spoken to one, they are very keen. They want a roadmap. They're in fact very appreciative of this stand that we have taken, saying that please extend the life of the vessel till the time you have the alternate fuel. Yes, there is definite interest. Okay, and I would say by middle of this year we will have our first bank on board with which is signatory to Poseidon Principle.
So Ian, there's your next piece of business.
I was going to just mention about one of the companies we're working with. We talk about the truth about carbon, how much carbon is actually emitted by a ship owner. At the moment, the calculation is actually, I think, 3.14 times the bunker ton or per ton. Now, unless you have a very expensive sensor at the back, that is an EU number, right? That is the maximum amount 1 ton of bunker can actually emit out. So we're working with a company that is actually using patented software, using the information from the engine, using the bunker samples to get the correct number. And that number is in between 4 to 6% lower than the 3.14. Okay? If you have a scrubber, it's even higher, i.e. 10 to 12%. So that way, the impact on you, Nitin, is that you may have a ship that is rated D. Because of the difference, you're going to go up to a B potentially. Now, with the software, it's linked with DNV, class, and flag. They've all accepted the verification of these numbers. So that, I think, is just telling the truth. That's the first thing. And then the roadmap after, when you put additional things on, the actual carbon per ship produced is actually reduced. So for me, that is probably one of the biggest things that I want to also highlight today. And I think that's where ship owners and the industry is trying to find what is the actual truth, rather than just a theoretical number at the moment. And the company is working with the IMO now to try and get this corrected, because we know CII is not fit for purpose to an extent, in your example this morning.
Great, thank you. So Endless, obviously you said you're not a ship finance lawyer, but you obviously are acutely aware of the various things. What I'd like to ask is, what have you seen as a firm, more generally, coming in from the banks in the last few years on the regulations, particularly in relation to carbon emissions, and do you see a significant difference between the traditional lenders in the Middle East versus the Poseidon principal banks back in Europe?
The first thing I'll say is there's been a change, because when the Poseidon principle first came in, I think you asked a question earlier, how well is it being enforced? I think from my experience, having dealt with some of it, it varies. It depends very much on the bank. We're definitely seeing more pressure on having more of the ESG perspectives put in the loan agreements, and there's actually a real focus on it. I think it's suddenly become quite important. It's not a throwaway clause somewhere hidden in a loan. Now it's front and center. It's got a far more push. I think the Western banks, the Poseidon principal banks, still a little bit more focused locally, but I think there's going to be a catch-up. And if I can just go back to a previous question you asked as well, in terms of how is the change going to happen, and you mentioned the insurance industry. I think there's enforceability from the financing banks. That's going to be important. You're going to either want to not be in breach of one of your covenants and find yourself in a bit of hot water or potentially in default. You certainly might want to take advantage of incentives that you might get from some ratchet financing. But how do you really get enforcement, and what might come in the future? You mentioned whether insurance companies might take the lead. We've seen with sanctions recently how quickly enforceability can happen if decisions are made and quite, taken at a higher level. For me, when we had the recent conflict in Ukraine, you had a lot of non-US related, non-EU related ship owners. I thought, well, it doesn't really affect me. But what really affected them was the insurers saying, I can't insure you because I am subject to EU or US sanctions. I do have serious consequences if you make that voyage. You're just going to go without insurance. And it becomes a huge commercial risk because you're taking your vessel and you're uninsured. Now, I can see moving forward at some point similar types of sanction being placed on an ESG front. And could you imagine if you then suddenly, it's not just a regulatory bit of a penalty, bit of a slap on the wrists, but it actually does become something where you can lose your insurance, you can lose your banks, you can be in event of default, accelerate your loans. That's going to be the real driver. And I think with the pressures that we've got, public opinion, it's just going to get worse. And we've got a new generation of people who've been brought up in what they see as a climate crisis, which is going to bring a lot more momentum for this stuff to be implemented. Not just CII, which is charterers and owners, who's going to pay for it, who's going to have the consequence. But what I really do see is within the next 10 or so years, we're going to see more and more of legislation which is going to be preventing owners from getting insured or getting any financing from traditional Western banks at least.
Great, thanks. I mean, I'm conscious of time. We're going to open to the floor in a sec. Just if I can clarify, at the moment, in loan agreements, there's a reporting requirement, but it's not an event of default. Is that correct?
As far as I'm concerned, it's not an event of default.
So therefore, I can report that I'm polluting the world really, really badly, but my loan still stays in place.
It's one of the problems which is identified with some of the Poseidon principles, which is going to be about the enforceability, how much it's looked upon. There's good branding, and I'm not saying it's all cynical, but there is certainly, it's not being enforced the way that for example, it's not being treated the way that a breach of sanctions would be treated currently.
Yep. Board, did you have a follow-on point?
It's an interesting point to think about the fact that we as an industry, ship owners, represent 90% of trade. Literally everything that we touch have been on board a ship once or twice or 5 times. And as an industry, we are unfortunately put forward as on the world as massive polluters, where we produce less than 3% of the CO2 emissions in the world. And it goes back to incidents like Sea Empress or big incidents where we have oil pollution. It is so bad. Whereas nobody thinks about where you could actually save a lot with these alternative fuels, for example. If you did that onshore, you would be able to reduce emissions much further, much quicker than what we're trying to do on the shipping side. It doesn't stop us from wanting to try.
Yeah, very, very well put. shipping is the same as the aviation industry in terms of pollution. And by definition, if we're 85–90% of trade, they can be maximum, well, you've got road, rail, everything else. So yes, but shipping is stateless. Let's open up to the floor. Do we have any questions from the floor? Do we have the mics available? One right at the very back. The gentleman on the naughty table at the back.
The backbench.
My name is Sohail, and I would like to ask Ian. It is compulsory that a vessel should be classed with DNV to have the data collection of DNV, or is could be any other class for EU?
Yes, so no, that's not required. So these are services that are independent of the vessel class. So we, on our Emission Connect service now, we have about 4,000 vessels. So it's growing really rapidly. We're having a very rapid uptake. And then on the EU MRV, we have about 30% of the market there leading. So yeah, it's not linked to the class. This is something that comes in addition. This is what we call a beyond class service.
Thank you.
Do we have any other questions?
Still at the back.
Good evening, fellow attendees and the panelists. Thank you so much for this intriguing discussion. I could observe that Chris's observations were majorly on the financing part. And Bobby also in his presentation mentioned that there was a reluctance on the part of the traditional lenders to extend credit lines to the shipping industry. There could be a few reasons why the lenders are reluctant. Maybe there is a lack of understanding on how this industry operates. Maybe the credit wants to deploy funds on relatively safer assets where the risk-adjusted returns on the capital are high. The compliance could have concerns because a financed vessel could go and dock in one of the sanctioned countries, and the legal could have an issue because the enforceability of the collateral or the security could be difficult. So what, in your opinion, could be the responses to these objections from the lenders? And the second part of my question is that the banks, even if they are willing to lend, they are willing to lend to Bobby or to Nitin, where the fleet sizes are huge, 41 vessels going to 43. But what about a smaller operator who is operating 5 vessels and looking to enhance the fleet by 2 more? So what options do they have? So these are the 2 questions that I've posed. Thank you.
I'll take it.
Yeah.
Bobby, you were mentioned.
No,
you go first.
It's okay. One thing I want to kind of put out there is few years back before we were listed, right? So we did not have so much of visibility from the investors into the way we do business, right? So we were like non-listed, so there was not much of visibility. But once we got listed, there's a host of questions coming from investors, because the kind of business that we do, the kind of model that we have is not very common. It's like, if you look at the retail industry, you can find so many peers, right? You can understand the industry so well. Okay, you look at, let's say, one supermarket versus the other supermarket, or banks but the model that we have, it's very difficult to find peers, especially in the Middle East, in the GCC, because we are just not like a container terminal operator or just a bulk. We are like a vertically integrated supply chain company. So what we started doing is, once we got listed, we started giving out more information to the market. So if you see our investor presentations, there will be more data about our key drivers as ports, as logistics, what are the key drivers, what are volumes, so that the investors are more aware, the banks are more aware. So we are trying to create more and more awareness in the markets, also with the banks, so they get to understand what sort of business are we in, to give them that comfort. So that has actually helped a lot to kind of give that comfort factor to the banks. And that's, so as we said, right, so now it's been 2 years since we got listed. There's a lot more of visibility out there. If you look at our investor presentations on the website, you could see a lot more information about what are the drivers of the business, each of the clusters, what's important. So it's more comforting to them. They also see every quarter how we perform. So the comfort factor goes up, and that's how, I think we build the credibility with the banks. The smaller companies, I don't know if anybody else wants to take that question. Yeah.
Well, I in a previous company, we started with 0 ships and we started from there. Let me answer your first part. One is, whatever you mentioned, sanctions, the wrong practices, etc. That practically banks run with every business they fund. So people who want to do illegal things will always, will do them. So shipping is no exception. So the shipping assumption is that everybody will do the right thing here. So first of all, financing is always for people who want to do the right thing. Second is, if you're a small ship owner or a startup who's getting into planning to expand your fleet, there is funding for everyone. Could be 1 ship, 2 ship companies also to, of course, ADNOCs of the world and AD ports. So yes, your start could be a little more expensive. You may have to go to a non-banking financial institution to begin with. There are lots of them around. And then once you have 1 or 2 ships, the word is going to catch, and immediately you will have banks coming to you. These days, slightly easier, because because thanks to this recent market, 2-3 years, banks were flooded with cash. A lot of ship owners have been returning money, and therefore banks are actually looking for quality borrowers. So if you're a good asset, which has a good charter attached, chances are you'll be spoiled for choice. If you want to borrow, this is the right market for you to start.
I was going to say, the issue with the banks is when we see a lot of new banks wanting to come into ship finance, the front office is always marketing, right? They want your business. But I say to them, let me speak to your head of credit. Does he understand shipping? Because the reality is the front office wants your business, and then sometimes it's a no at the end. Why? Because the head of credit, the credit team, don't have any shipping experience. That's the first challenge, which makes it very difficult for new banks or new people from the front coming in. And then the second part was about the option. I agree with you. In that chart I showed you, there's a huge range. The reality is a new company or a small company has to pay more, but that's the price you pay of entering the market. And I think it's probably, you've got the most choice today. Go back before the crisis, only the top European banks really were doing shipping. And now they've been spread and gone. Now all the alternatives, the joint ventures with private equity, the higher leverage, non-amortizing, banks don't do that, but you can do it. So going back to Bobby's point about strategy, the finance has to fit the strategy, not the strategy fit the finance, right? Because you are the owner. You decide how you want to do it. Get your financing to fit your strategy. If you want to continue with the banks at 60% max, or whatever it is, fine. But if you want 80 and you want non-amortization, there are people out there. So for me, being on the other side and being on the front side, the opportunity is there. You just have to pay a little bit more for it. But you're good negotiators. I'm sure you'll do well.
One thing I wanted to add also, right, is that as a company, we also try to facilitate these kind of, bank lending arrangements for our customers. So one of the examples is if you look at our industrial zones, Kizad, right, there's a lot of SMEs who are there, who actually want small, the bank loans and things like that to finance their business. We try to kind of facilitate that. We have one-day sessions with bankers, meeting our customers, trying to facilitate this kind of things. So this is one of the areas also as companies, we can help, smaller companies to get finances. Of course, it will be, a lot of it will depend on the merit of the company itself who's looking for finances, but it also helps that they are coming through us because they are our customers, right? We have also done some sort of a due diligence on them.
Let's discuss becoming a customer.
Yeah.
Right. I think we've probably got time for one more question.
Hello. Am I audible? Yeah, hi. There was an article in the Financial Times yesterday, which was also touch-based in our session 1 by the moderator, that due to crisis in the Red Sea, the ship owners, charterers are increasing the speed. So is it feasible to do it with the regulations in place?
Sorry.
Can
Can you repeat the question? We didn't get it,
Yeah.
sorry.
There was an article in the Financial Times yesterday that due to the crisis in the Red Sea, the ship owners, charterers are increasing the speed of the vessel. So how feasible it is based on the regulations and the compliance?
Increasing the speed in the Red Sea.
No, because they have to go around the Cape,
Correct.
you mean?
Yes. Yes.
Yeah, so I think it's more to do with what we were discussing in the morning because of some people have decided to go around the Cape, so they have to increase the speed to make the lake can. So yes, of course, that will increase the, if you increase the speed, you will increase the carbon emissions.
Except the CIO goes down.
Yes, yeah,
So
no, see, that's the beauty of the thing, right? Now, if you go longer, what you were mentioning in the morning, if you go longer, then it'll probably come down, eventually.
Yeah.
But on that point, what I didn't discuss this morning is, again, if you're taking a Cape size, a VLCC, something like that, and you're going around the Cape, it's not a problem. And when you read in the mainstream press, like the Financial Times or any normal newspaper, it's generally talking about a 15,000 plus TEU container vessel travelling at 18 knots or something. So the information is quite limited, and it's also basically wrong for most ship owners. If you're taking a handy tank or a handy bulker, first of all, your bunker tanks don't have enough to get you from Asia to Europe. You have to stop in South Africa. There's been port congestion in South Africa, 4 bunkers for up to 2 weeks. So all of these timings that people have been talking about, bunker prices in South Africa have gone through the roof. There's a whole set of different issues that are not on the topic for today.
Thank you.
Can I?
So one last.
Can I
here,
add
and
to
then
that?
we'll go to coffee.
Oh, okay.
Yeah. So Faiz Riami from Bahri, Saudi Arabia. So my question is, I know I have seen, based on the studies, I see the demand of ships from VLCC, tankers, dry bulks is increased, and the financing are providing more facilities. So the $1 million questions, is there any shipyard will provide or will meet the demand for the ships? So that's my question.
Well, I can come in on that. If you look at just 5 years ago, if you ordered a ship today, you'd get it in 2 years' time. Now it's 3 to 4 years. Basically, shipyard capacity has gone down. There's also, particularly in China, there's a problem with refund guarantees. Most ship owners are not going to build a new ship unless they get a first-rate bank guarantee that if the ship isn't delivered. So there are challenges with the shipbuilding, which is why you're now seeing that the order book's actually quite low, even though all the shipyards are full, because a lot of the shipyards have shut down. So you are seeing a delay in ships coming out. Also, they're extremely expensive now. I mean, I'm seeing ships in the second-hand market being sold for 30% more than they were ordered new 10 years ago. And you're seeing new building prices that are something like 80% higher than they were 10 years ago. It's quite astonishing, if that answers your question.
Thank you.
So with that, I think it's time to go for the refreshment break. Thank you to Trevor and to all of our esteemed panelists.
Thank you.
Thank you very much.